Hello, guys, and welcome back to another live here on YouTube. I just wanted to first and foremost, just say a huge thank you just to everyone who supports me in this YouTube journey. I was talking to some people yesterday, and they were criticizing is probably too strong of a word, but they were saying, why would you get on YouTube to talk to 50 people? Like, wouldn't it be better served just to record videos? And I really love this part of my job, is like getting to actually interact with clients on a regular basis. So it means a lot to me that you guys show up to these lives, ask your questions, and just root me on as I endeavor in this YouTube world. So I just wanted to start out first and foremost with that. For you guys who are just joining us here, I'd love to hear where you're tuning in from and where you're at in the home buying process. And then let's get your questions posted so that we know, uh, so that I can start answering them, I guess. All right. So I always like to start these lives off with a market update on where interest rates are at. So lots of really interesting things that are happening in terms of the world. So for those of you who may or may not know, we have some geopolitical issues going on with Russia and Ukraine. So our government is putting sanctions against Russia. And essentially, just to kind of give you like a super basic layman explanation, is that whenever we sanction a country or whenever we stop doing business with a country, especially one with large oil production, we essentially have to then purchase our oil from other places, driving up the cost of of gas, and then also creating more expenditures for businesses that do import and export. And this type of volatility actually impacts the stock market quite a bit, because whenever you impact revenues for goods and services, you actually impact the returns to shareholders. And when things become unpredictable, investors withdraw their money from the stock market, put them into things like mortgage-backed securities and in bonds. And that's what we've seen for the last week. And so we were seeing stiff increases to interest rates due to inflation, and then we've seen some recovery, some reprices for the better because of what's happening in Russia. Now, I hate what I'm going to say is kind of controversial, but it is true. So there is that too. Whenever you are watching interest rates, anything that will negatively impact the economy, like anything with, like weather, war, natural disasters, I mean, anything of that nature, right? Anything that has like any that will really rock Wall Street will always be good for your interest rates. So you watch for bad things to happen. Now, we have a couple of things here that I think are really important to note, though. So today, the sanctions, the actual what was coming out in sanctions came out, and they were less aggressive than people had feared. And so that actually was better for the stock market. So people always price in anticipation of. So just pay attention to that. Like, the news will always have an impact on the market more than the actual event will happen. And so we saw that today. We also have some pretty significant inflation numbers that come out every month, the personal expenditures, right? And this is the marker that the Fed has really been paying attention to when it comes to their concerns over inflation. So that comes out this month, and so we could see some big movement. So in general, in this type of environment where things are volatile, I am more of a locking biased. Okay, so if you are comfortable with your payments, I would not roll the dice. All right. Now, other things that came out, which I thought were really awesome, is that they've actually improved home appreciation expectations for the year. So Case-Shiller is like the gold standard when it comes to real estate reporting and their expectations for appreciation. And so they've improved their expectations to almost 1% per month in appreciation. So that means that we will be in double-digit appreciation again for this year. There's some markets that are just killing it. Phoenix is one that is leading, right? The top performing cities were Phoenix, Tampa, and Miami. Phoenix with 33% appreciation, which is just really, really insane. It's just really insane. And so the top cities, though, leading for this month actually were San Diego at almost 2%, Miami at almost 2%, and Dallas at almost 2% too. So really interesting stuff. All right. So let me know if you guys have any questions about what I just gave you, because I know it's a lot of data and a lot of stuff. And then, we got some questions in here. All right. So, hello, Jesus. Glad you're here. Paul, Van Slama, lots of Van Slama. Oh, Rod and Laura, thank you for coming. Devin. Yeah, it's very randomly rainy and haily today. And then Georgetown, very cool. Awesome. Okay. So Paul Ernest says, should I attend the appraisal? So that depends. I do know that a lot of times when consumers come to the appraisals, sometimes it can become a pretty combative situation. It depends on how in check you are with your emotions. Are you going there to provide the appraiser with more information, show, additional features for your home, give them receipts for any repairs that you may have done, right? These are all really great things to do. And you might actually prepare that in an appraisal package. Appraisers don't, first of all, it's against the law to influence them. So they really have a hard time with communication with the client, with the lender, with the real estate agent. So they also might want to not be present when you're present. So it might be difficult to get that scheduled. But I have seen it go really negative when a client is at an appraisal. Like literally, I've had appraisers walk out of properties. I had one say that the lady was stalking him around the house, badgering him about what she thought the appraised value would be. And that guy just quit doing the inspection mid-inspection and left. So just keep in mind, what your level of, I always like to think we have emotional elephants that our little brains ride. And at any time the elephant can knock us over, if your elephant is very strong, maybe don't go to the appraisal. All right. All right. So let's see here. We have Enslama who says, let's see, where we live, buying an unrenovated home in the 1970s can be about 900,000. Should we keep looking right now or wait for next spring or just sell our house and pay off debt and rent for a year? So that's a really loaded question. I just told you that most markets are going to appreciate 12% this next year. So does that make sense for you to wait? Is the home that you would be purchasing going to be that same 1970s home, except now 12% higher? If getting out of debt is going to put you in a significantly better position in terms of interest rates, in terms of budget, sometimes we have to take a step back to move forward. So it's really hard to really answer that question without knowing more about your finances. But if the first question is just is it going to get cheaper down the line? No, I think interest rates are going up and I think the house will be more expensive. All right. Okay. So is it Hutton Bob? It's kind of scary, to be honest. So are you talking about what's happening with the geopolitical situation? Are you talking about the market being scary? What's specific? Oh, Theo, what's up from California? Gabby D says, hey, I went under contract yesterday. Girl, I'm so happy for you. Oh my goodness, congratulations. Feels good to be at least moving to a different set of stress. Oh my goodness. So just so that you guys know, when you are under contract on a home, it is the second most stressful event, short-term event in a person's life. First is death of a family member. So any kind of stress you're going to feel right now is very natural. Most people feel it. Whenever I talk to clients at the very beginning of their situation, there's tons of fears on, are they going to qualify? Are they, anytime I'm asking, what do they need this for? So just be really proactive at this point. Shop for your homeowner's insurance, get updated paycheck stubs, bank statements. I would have everything saved in a file folder on my desktop, just in case people ask again. It happens sometimes. So, but I'm really, really excited for you. I know you've been tuning in for a while, and it's just so exciting for me to see you also take that next step. And then we have Tammy, guys. Tammy is literally such an amazing agent here in Phoenix. She services all of the Phoenix metropolitan areas. She's amazing, and I hope she'll stay around so that just in case you guys have real estate questions, she might answer them for you. So Theo B says, Will you be offering a 40-year interest-only mortgages for investors? Are more brokers discussing this? So yes, so we currently have a 40-year mortgage product right now. And yes, it does come with interest only. It is a non-QM type of loan. There's a lot of different stipulations with it. It is not for like first-time home buyers. It is for somebody who can put a substantial amount of money down, but it is an option. And I'm noticing that there's quite a few non-QM type products. So that means not quality mortgage act. So nothing that's going to be financed or insured by any of the agencies, Freddie Mac, Fannie Mae, FHA, or VA. So anything that, and it won't be as regulated as those types of products. But yes, there's lots of new things coming down the pike. And yes, more brokers are coming out of the woodwork with all different kinds of things. Do I have any advice about waiving contingencies? It seems that the only way to get a purchase, some people are even giving up 30 to 60 days rent free. So yeah, so essentially, guys, it is a very competitive market. And, you know, it used to be that the sellers would basically pay you to buy their home. That was like literally a decade of that type of situation for sellers. Now it's reversed and buyers are having to, you know, agree to pay over appraised value, agree to waive inspections, agree to waive, you know, any kind of repairs. You know, I do see some pushback from buyers in regards to really paying way over appraised value in markets, and houses that just go directly as overpriced sit. And so I do think it's like an easier to negotiate market. But here are things that I always think help a buyer get their offers accepted. It's one, write a personal letter detailing why you like their property, make it specific. Two, I would include things like a proof of funds. So show them that you have money to pay over and above asking price and appraised value. When waiving contingencies I wouldn't waive are your finance contingency. You know, get a really detailed home inspection, you know, maybe shorten the inspection days. That's something, you know, shorten your close of escrow days. And yes, you can do a lease back period for up to 60 days. You have to occupy your home within 60 days. So that is something to pay attention to. It's required by all loan types. And I have seen people be aggressive in that regard. There is some risk to that also, because you are going to be, you know, allowing other people to live in the home. So you will want to make sure that it is insured during that time frame. So that's my best advice. Hope that helps. Okay. Hey, Devin, nice that you're back. I'd love to meet you in person, by the way, sometime since you are in Phoenix. All right. So it says, does your credit score matter very much on less than half loan to value non-cash out refis? One website made it look like a 680 to 740 was basically the same rate. No, credit scores, guys, are very, very impactful in all categories. Whenever you get under 60% loan to value, though, that's where you get the best price breaks in terms of loan level price adjustments. But no, there is a significant difference between the credit score tiers. You know, what's hard when you're shopping for interest rates online is that you're only going to see advertisements, and when you look, you'll see like, oh, this is only applicable for this states, or with 20% down, or there's 2 points next to it, or the fees are really high. I mean, there's all kinds of disclaimers to protect the banks that have those ads. And then sometimes they're just really misleading ads that are terrible that, you know, typically get taken down, but there's so many of them for these regulators to try to capture all of them. It's hard. So you just have to be really careful, because oftentimes you'll call in saying, hey, I saw this. And then they're like, oh, well, that was just the ad for that day. Today's rates are this, you know. So I hope that helps. All right. So Pranishi says, or Devanshi from Houston here. Nice that you're here. Thanks for all your informative videos. Basic question: does a pre-approval impact credit, hurt credit score? What's the ideal time frame to go for it? So anytime you have an inquiry on credit for actual financing, so not when you guys pull your credit, it does place an inquiry on your credit score. And my understanding of credit is that you have 6 credit pulls before it actually has an impact within the last rolling 12 months. So not in a calendar year, it's like rolling 12 months. So that means from February of 2021 to February of 2022. Now, the reason for that is because they have done studies and they have shown that people with 6 or more credit inquiries trying to get out debt is the like a predisposition for people that then file for bankruptcy or have like a major credit event. And so that's why it hurts your score. Now, it is the lowest impact of all of the different factors for credit. And so you should only really, really be concerned about this if you know that you're kind of like in between credit scores or maybe on the cusp of not qualifying. Now, that being said, a credit report is good for a lender for up to 120 days, which means that you have 90 days to shop and find a home and get under contract, and then 30 days to close that loan with that same credit report. Oh my goodness, guys. Serge Lupescu is on here. He is one of my favorite past clients. He has an amazing channel on his own. He can teach you everything there is to know about group homes. I mean, he's a wealth of knowledge on all things. I'm so excited that you're on here. Okay, so Sean M says, should I use both my wife's and my income to qualify? She might not be working in the future, so I'm thinking I should just use mine. Thank you. Honestly, it really just depends on, what you feel comfortable with. So oftentimes we may use income to qualify just to strengthen the loan profile. So we definitely don't want to just discount it just because in the future that might be a potential. But if it is going to be short term, you are going to really want to consider what that does to your monthly budget. Are you anticipating a raise? Are you anticipating like higher income earnings for yourself? If not, I would definitely try to qualify on just your income alone, just so that way you don't put yourself in a house poor position without a plan. All right. So Abe says, thank you so much for the birthday cupcakes. Well, happy birthday. So excited that you got them and like them. They're my literal favorite treat of anything. So I'm glad you like them. Oh, tell me which one was your favorite. My favorite is the one that looks like the hostess. What is it? Oh no, I'm like drawing a blank. But it's the one that's chocolate that looks like the Debbie hostess thing. It's like my favorite. All right. So Devin says, speaking of 40-year, is the difference between the rate and a 30-year fixed, not looking but interested in the yield spread. Honestly, I haven't priced out enough 40-year mortgages to know. The interest rate is definitely significantly higher than the 30-year based on what I had seen, but they do offer interest only options and the payment was lower. And so it just depends on like what you're really trying to do. So the reasons why somebody would do a 40-year fixed mortgage is one, when they're getting into higher purchase prices and they know that they have a plan, right, for their finances. So maybe they have a large down payment. And we just recently priced one out for a gentleman buying a $900,000 house. And he knew that he was going to be getting a significant change in pay. In income, he's actually receiving a trust. And so he wants to qualify for the home today with today's valuation. And then he knows he's going to be refinancing in a year. And so that situation, sometimes a 40-year interest-only mortgage makes sense. But in general, for first-time home buyers, I don't know that the difference in interest rate is worth it. But you do always want to compare and contrast every situation. All right. So Olivia says, my current loan officer has been very slow with getting us information on our pre-approval. He's with our credit union, but I want to look elsewhere. What are some great mortgage companies? So I would generally look on review sites, Google your realtor's recommendation. A lot of times credit unions are nonprofits. So whenever you're dealing with a nonprofit, realize that they're not going to be as expeditious as somebody who's like really working for their money. That being said, I typically hear this type of thing when people go through like large internet companies and like big banks, because people have limited availability and you speak to a ton of different people on there. So I would get a recommendation from friends, family, real estate agents, and then look at their reviews online. Oh, thanks, Serge, for the love. I really appreciate you, honey. Where can regular home buyers find information on 40-year mortgages? There isn't a lot of information and not a lot of banks offer them today. I do think that with the challenges with affordability and the increase in home values, I do think that we are going to see more and more information about this. I did record a video about 40-year mortgages if you guys want to take a look at that. And that has the most recent information, although at that time we didn't have a product, but I'm giving you all of the information that I have. You know, I would talk to people like me who maybe have access to brokered accounts and then also have their own portfolio products, right? What their options are for a 40-year mortgage. All right. So now for some email questions that I got in this week. So Kevin says, I have a question. So my realtor keeps trying to connect me with their lender, but when I contact their lender, I never get a response. What would you recommend me doing? Find another lender? Yes. So one, I would give that feedback back to the real estate agent. I will say this, okay, because I don't want to be a hater on anyone. The last 2 weeks have been really challenging for most lenders in general. So just so you know, we had a swing of almost a whole percent within a week. And that requires us to, one, like we have so much panicked phone calls, conversations. We have to resell loans. We have to requalify loans in addition to anything new that's coming in. So I will say that just in general, I've heard this complaint within the last 2 weeks, and it's just a really valid complaint for one, the time of year it is, it's busier than normal. And then two, having to just have an influx of volume of work that you may have already done before. But I would recommend giving that feedback to your realtor. I'm sure you'll get a response way fast. And then second to that, if you're unhappy with their services, you can always ask friends again for recommendations on who they like and then check out their reviews. All right. Taylor says, is it true that you can run multiple mortgage credit checks with different lenders for 45 days and it only counts as one hard pull? Yes. So they allow for you to check your credit with this for the same type of credit thing. So you can't do auto loan to mortgage loan because those would be considered different types of credit. But you can shop, 3 to 5 lenders, right? Again, under 6, and can't have it impact your credit as only one credit pool. All right. So Maria says, Dave Ramsey suggests a third of my take home or less to be for my mortgage budget. Is that a reasonable outlook? I actually think the same. I think it should be anywhere between 30 to 50%. Now, the only way I would say 50% is allowable is if you have no discretionary like spending. So no credit card debt, you're a minimal, like you go out minimally, you're not spending a ton of money. You just want to make sure that there is enough money to, again, save on a regular basis and pay down any debt. All right. And then Pranishi says, how important do I think a realtor's role in is if we can talk directly to the builder? What all services can I expect from my realtor? Okay. So more so than ever, I think real estate representation of any kind is necessary with a new build. Those contracts are written in favor of the builder, and in a market where you cannot land on a stable like build price, materials, closing dates, inspections, you need to make sure that there's somebody in your corner that is fighting for like the job to get done in the best manner it can and in time. And so I always think that it's like, I would never recommend a buyer and a seller do their own deals because lots of things go wrong there and it's a very emotional process. And I think that buyers that are not represented with the builder are in jeopardy of having lots of things change on them. And also, they're also at risk of having their contracts canceled because, as you realize, equity is going up at least 1% per month, according to these reports. And what's to stop them from trying to cancel your contract if they can sell the house for way more? And we have seen that. If you Google it, it's made national news. And so you just want to, that's what they're for. Your real estate agent checks and inspections, holds the builder accountable, reads the contract for you, make sure that you're staying on timelines, right? Like knowing your finance contingency, knowing the build contingencies. So yes, I think they are worth their weight in gold if you find the right one. All right. I will hop off my soapbox. Oh, Red Velvet was your favorite. Love that. Okay. So Paul Ernest said, so I went under contract last Friday. A few questions. What are the most important things to know? I had my inspection yesterday. How do I review the report and ask for potential seller credits? It depends on how competitive your offer was in first place and if there are any backup offers. So I know that some homes have like 2 and 3 backup offers. So if you're going to be asking for a ton of repairs, a ton of credits, just know that you could jeopardize your contract. I would always talk to your real estate agent about what they think is advisable. And I would get a quote from most agents are in contact with a handyman that can say, hey, this is what it would cost to repair these items. So just pay attention to that. But I mean, generally speaking, in this market would probably only ask for significant changes. So I've never seen an inspection that didn't require like at least, $1,000 to $2,000 worth of work. As a homeowner, I anticipate that kind of maintenance and repairs. But really, honestly, it's going to depend on your actual deal, and your real estate agent is going to be a way better source of advice for that. Okay. Let's see here. What's the relationship between discount points versus rate? Like how many points means a quarter of a rate? Approximate info is fine. So that's a really wonderful question. It used to be that 0.25% would cost about 1% of your total loan amount. It varies all the time now, like literally per hour. So I couldn't even give you an index on that. But I will say that every interest rate will come with either a cost, a credit, or a be at par, which means that it's like no cost, no credit. And so you definitely want to always ask for your options on that. But I wish I could give you a better ratio. It's just not the type of market for that. Okay. And then Tammy says she absolutely agrees with me on representation on the buy side. Tammy, have you seen anything crazy like what I just described? It would be helpful for them to hear like, a realtor's perspective on things that she might have saved her clients from. So Carla says most builders have reduced commission to buyers, realtors 1.5% to 0%. How do you incentivize a realtor to work with you? I mean, in lots of cases, guys, regular sellers and resale homes have done the same thing, and buyers are having to again pay for representation. But you guys, like, think about going to court, right? How comfortable do you feel representing yourself? Right. And you would almost never question paying for a lawyer. Like this is literally going to be your biggest asset and your biggest liability. Okay. And we've all seen and heard nightmare stories of awful transactions. Like I can give you one today, We were closing a deal and we found that there was this random lien by the seller. Okay. And it was on title and it belonged to 2 sellers prior to our seller. Okay. And so the title company was supposed to be working on getting it cleared. And all of a sudden, fast forward, the loan's been closed for 2 months. I find out it's not paid off. I mean, that's the kind of crazy stuff that happens. It's also why you get title insurance, though. And so not having the right representation, the right people that like make sure that shit does not happen, is like worth its weight in gold. So you might have to pay for your own representation, but like I said, actually, this is a really good quote for all things in life. The longest and most difficult way is always the shortcut. All right, let's see here. Okay, I know it's difficult to predict. However, based on my experience, what's my prediction for the next 4 to 6 months for 30-year fixed conventionals, considering a 6-month long? Hence the question. Well, I'll know more Friday, and I think next week live is probably going to be a lot more detailed on interest rates. I think that for the foreseeable future, interest rates are going to be in this line of where they've been right now. So like mid 4s, high 3s. And I say that because a lot of the market prices have already been impacted by what the Fed is going to do in March. Now, we still have, more inflation numbers to come out. They still have to make that change in March. And so that's why I gave you such a large swing on interest rates. 6 months is probably, to be honest, too far for me to predict because, again, every month inflation numbers come out and we still have to react to literally what the change will have been for the Fed in terms of how that impacted inflation. If we see that it starts going down, it should improve. Now, I'm going to say something and I don't want it to come back to haunt me. Okay. But generally speaking, whenever you impact the bottom line to Wall Street, so they're going to raise the Fed funds rate. Okay, so essentially it's going to become more costly for banks to loan out money, which will impact their profits. Right now, at 0% interest, they have maximum returns on all of the loans that they lend out. Okay, so this is going to impact, the costs of everything for all types of services. So it should impact the bottom dollar to Wall Street. When that happens, guys, bonds and mortgage backed securities become more attractive, but it is a delayed response, right? So the reason that people get freaked out when it comes to mortgage interest as it relates to the Fed funds rate is because we react preemptively, so before it happens, and Wall Street is impacted after it happens. So we have this like weird back and forth. So my expectation is that we will see a rise and then we will see it come back down. How much down? I don't know. I don't know. I doubt it's going to be in the twos. I'm talking about keeping the same range that we're in now. So would it make sense to do a 6-month lock? Well, locks that long are really, really expensive. I just priced this out for somebody else the other day, and like literally it would take them 5 years to break even on the cost of securing the rate. Now, are you going to live in the house? How long? Does that make sense? I mean, I think it, I think there's still a chance that you should roll the dice on that. Again, I'm not your loan officer though, and this is just like a person giving her personal advice on YouTube. All right, so that was a long answer. I hope that helped. All right. So Julie says, can you tell us more about locking in rates and when in the home buying process a buyer locks in the rate? It's a bit confusing to me. So typically you would lock in your interest. Okay. So we get a purchase contract and we have to disclose to you within 72 hours of receipt of it. So within 3 days. And so generally, did I say 72 hours? 72 hours is 3 days, right? Okay. I'm tired today. Okay. So we have to disclose with you at 3 days. Generally in that time frame, most people will lock in your interest unless you ask them to float and you're watching the market. Now, that is very specific to like a 30 to 60 day close. If you're in a new home build contract, typically we wait until you're 90 days out and then we start looking at what it would cost to lock you in and watching the market at that time. All right. So Devin says, with the 3,500 single family detached homes on active MLS today, thoughts on trying to buy an existing home versus looking at new builds. A lot of people are trying to buy new builds. And I think it makes sense, especially if you know where you're going to live for the next 8 to 11 months, 13 months. I think there's a lot of advantages with buying new builds right now. One, you get a brand new home. And two, you're walking into equity. The disadvantages though are you can't predict the price and interest rates are going up. Okay. So those are things that you have to consider. So if you are very budget conscious, buying a resale is probably better for you because you can control more terms. But it is tough. And so things that I might consider if I were a buyer in this market is, can you partner with another family member and get a multi-generational home? Are you working with a realtor who has access to off-market properties or who's willing to door knock, willing to find deals for you? It's challenging right now, guys, and I feel for you. And, there's a lot of misinformation on why we have such limited inventory, but it is a result of underbuilding. It's, our aging population not moving out of their houses. And now we have 8 million houses that have come off the market because people are keeping their primary residences and using them as rentals and or buying multiple investment properties. And so that's the type of environment that you create when interest rates are high, or excuse me, low. And so, I'm expecting that with the higher cost of things that people will, decide to sell or decide to sell and more inventory will come available. All right. Let's see. I'm in a 60-day lock now, should be closed at the end of March. How would my lender find out if my pay change hourly? Oh my goodness. You have to tell them. They check your employment all the time, guys. Just so you know, we check it at the very beginning, we check it right at final approval, and then we check it right before you fund. Please, 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 please. And I'm not saying you're an asshole, but I literally think clients who do not tell us these things do not anticipate the kind of stress that we endure trying to re-verify, re-qualify, and handle your loan. So yes, communicate with your loan officer. And guys, for the freaking love of God, do not change your financial situation during your home loan. All right. Sorry. And I'm sure you're awesome, Turnpike. That wasn't directed at you, but obviously you can tell that I have legit I think PTSD is probably too aggressive, but an emotional reaction to the number of times this has happened to me. All right. So Julie says, I'd be worried about the quality of new construction going on these days. I mean, yeah, that's definitely a concern. We have a lot of instability with labor. We have a lot of instability with materials. And I do think that builders are doing their best to try to speed up these home purchases or these home builds. And so, yes, I think that there's always questions with quality, but those homes are warranted. And I mean, they are owned by, companies that are publicly traded. And so they have to turn out a quality product. So I don't know how big of a concern it would be. All right. So what is the difference between construction loans versus long-term rate lock? For a conventional loan in the market, a lot of lenders using, okay. So I'm not 100% sure I understand your question because those are two different types of scenarios. So a construction loan is where you finance land and the build in one home loan, and then that is dispersed in allotments to your contractor so that they can build the home, and then at the very end you do a permanent loan. So that's generally what a construction loan is. An extended lock is you have a builder who is paying for all of the build costs, all the material costs, everything, and then you are just doing one permanent loan at the end. And an extended lock says that you can lock in your interest anywhere between 6 to 9 months before your move time. So I don't even know if I answered your question. Let me know. Okay. So Tammy says, for new builder buyer representation, most helping with timelines, definitely reading the contract, catching builder debts being charged to the buyer. A huge issue with appliances not being in the home at closing. Oh my God, you guys, this is happening so much. You know what also is annoying? The freaking medicine cabinets. Those things have been missing on almost every single new build that we have closed. And if it says that you have medicine cabinets in your plans, believe it or not, that is a thing that could hold up your closing. We've been getting them moved post-closing, and people have been going out and buying their own, but it is an annoying thing to pay attention to. And then a huge issue again with appliances, it's your agent's duty to protect you as the buyer. Just a few. Thank you, Tammy, for that. All right. So Digital 6 says, do you think VA rates will jump like conventional has in the past week? Yes. So all types of agency loans, guys, are impacted by what happens in the market. So yes. So if a conventional loan rate goes up, so does VA, so does FHA. Pranchi says, should I have enough cash to pay down payment before I go to pre-approval, or having equities in an investment account is enough? So long as you have a plan for how you're going to get the funds, and it's a realistic plan, like I'm withdrawing from my retirement funds, or I'm getting this check in by this date, or I'm getting a bonus that is guaranteed, you can get pre-approved ahead of time. Now, the only risk with that is that if there is any volatility or uncertainty with when you're going to receive the funds or the amount of funds, I would always have a plan B. I would never go with, I think I'm getting X, Y, and Z, and then have it not come to fruition. I often see this a lot with proceeds from the sale of the house. So there's anticipation of what you will be receiving. And then based on how the market is or how the contract's negotiated, or, turns out you had this random solar lease that has to be paid off. I would get really nailed down net sheets right at the beginning of that sale, or just really track down FedEx tracking, communicate with a lawyer if it's a trust, amount that you're receiving or a settlement. But I would definitely just have a plan A and a plan B if I was going to get pre-approved before having the funds. All right. So Raul says, is there a formula to use for how to figure out how much I'll be spending to purchase points to lower my interest rate? No, I wish I could help you. Historically, it has seemed like, anywhere between, 1/4% to 0.375, maybe up to a half was with 1 point. It's never 1 point buys you 1 point. That's often a misconception. But in the market where the yields move literally hourly, it's really difficult to predict. Okay. Is it standard practice if a builder gives a closing date but unable to close due to some delay, builder will pay the cost for an extended lock period? In this environment, I have not seen the builder be willing to do anything aside from let you out of the purchase contract. So, that is like basically it. So I wish, guys, this is just not the kind of environment that is buyer friendly. And I'm sorry for that. My heart goes out to you guys. We help a ton of first-time home buyers, and it literally pains me to tell you that, but it is the truth. Okay. Do I recommend taking money from a 401k to help you purchase a home? Yes and no. Okay. So whenever you take out money from a 401k, realize that it impacts your net take-home income. And if you are very budget conscious or buying, at the top of your budget, you want to know that this will impact, your ability to make your mortgage payment. So you really want to pay attention to that. The other thing that I don't like is sometimes people don't understand how to borrow from a 401k and they end up withdrawing the funds. Whenever you withdraw the funds, there is a tax penalty. Now, I will say that if the only way for you to purchase is to borrow against and you can afford it, I don't think it's a bad thing. You pay the interest back to yourself. And typically the rate of return on real estate right now is higher than what you would actually see in your 401k return. So you're going to be getting the interest, you're still going to have your money invested, and you're going to be seeing the house appreciate. So I don't necessarily think it's a negative thing. Okay. But it really just, again, like I know it's always a cop out for me to say it depends on your financial situation, but it really does. Okay. Gabby D says, should I wait to deposit and inheritance checks until after I close? I'm early on in the process and can provide documentation regarding the funds, but I could also wait. No, I would just deposit the funds, provide them with the information. If they can't use the funds, they can back out the amount from the balances. You just want to make sure that you're not depositing cash. An inheritance is rarely ever cash, so I don't think you ever have anything to worry about in that regard. Carlos says, do I foresee home and rental prices increasing in Arizona? I have a condo that I own free and clear and have decided to rent it. As I see home rental prices increasing, is this a good move? Yes. So like I just said, the Case-Shiller report is saying that Phoenix is literally the hottest market in the entire country at 33% appreciation on an annual basis. I think that as we become a less affordable market, I do see more people entering into the rental pool. And just like we've seen with, housing supply and demand, that will drive prices up. So if you are a landlord, especially one that owns their property free and clear, you should be making more rent. All right. So back to email questions while you guys fill up the chat. All right. So Doug asks, how do you apply for 2 lenders and do they know that you're applying to both of them? So yes, guys, as a lender, maybe not the first lender, but the second lender definitely knows that you've had your credit pulled from the first lender because we can see all of the inquiries that you guys have done. And so generally, if they're a good loan officer, they will check that and they'll know that you're shopping. So there's that. Terry says, should we pay off debt and reduce DTI before applying for mortgage? We want to qualify for as much as possible, and I feel that our DTI will prevent that. Also, I've heard that it's not a good idea to pay off all your debt before applying for a mortgage. Is that true? So this is a really loaded question, and I'm going to answer it to the best of my ability because there's different ways that you could take that, okay? So if it was debt that you were 100% going to pay off, regardless of what anyone says, I would do it before you get pre-qualified, typically 30 to 60 days beforehand, so we can see what the impact was to your finances. If you pay it off a week before and then talk to a lender, none of those changes will have impacted the actual credit score or the finances. And they'll have to do things like a rapid rescore, which is just another pull on your credit. Now, if you are unsure of how to use the money, I would definitely recommend talking to a loan officer, because a lot of us can do like credit simulations and we can talk you through how to maximize your debt to income ratio. And that would probably be the route that I would recommend most, because I hate for people to do things blindly. Sometimes they're upset because they've paid off a credit like card that would have no impact to the score, but they wouldn't know that because they don't have access to the same type of tools that we have. And sometimes people pay off a debt that maybe has a lower monthly payment and a higher balance because it's their largest debt, when they could have paid off like 2 to 3 smaller debts for the same amount and have a way bigger impact on their monthly payments. So I hope that helps you guys watching. And Terry, I hope you're tuning in. Junior says, "Hey Lizy, feed us with your knowledge." Oh, hey guys, this is a good time for me to remind you to like this live. Please give me a thumbs up if you feel like you've been getting value from this live. All right. Devin says, "What's my advice on paying off a mortgage early, depending on the borrower's age?" Oh, and people hit the like button. Oh, thanks, guys. I appreciate it. So here's my general personal money philosophy on paying off your mortgage. I think that you have, like, especially if this is not your forever home, I think that you're better off investing and maxing out your retirement and investing in the stock market, because you're going to have, at least in this market, double what you're paying in interest. And the house appreciates at the same rate, regardless of the mortgage that you have on it. So if you are not struggling making payments at all, I think max out your investments. Now, there are a lot of people that dislike the amount of interest that you pay. And I actually did the math for somebody the other day, and I was like, this is why it's important to own real estate. So just so that you guys know, this is a national average, but housing values double every 20 years. And if you look at the last 20 years, that still includes like the biggest recession, the biggest crash in real estate that we've ever seen. Okay. That is still true for that. So when you get a mortgage, just know that whatever you're borrowing today, double it. That's what you pay, right? But the house doubles too. And it's always more than whatever your loan was. And then, so if you think about the fact that it will double and pay off your loan, you essentially could live for free, right? I know it's kind of sounds crazy when you think about it. And so if you would have invested that money in things that have, an 8 or 9% return, right? You essentially made a return on the real estate, right, over and above the double loan amount that you would have paid, and you would see those returns. So the person who does that will always be wealthier than the person that actually never paid a mortgage. Now, if this is your forever home and you are on the decline with income, right, and monthly payment is going to be a really big factor for you, that's when I always recommend starting to pay off your mortgage. My personal plan is that when I'm getting close to retirement, I will have like a 5-year payoff time point. And so I will really be being aggressive in applying principal reduction payments. So pay attention to that. Talk to your financial advisor about what that looks like. Also, you could create a plan for, having enough income to cover the payment. There's so many things you could do, even a reverse mortgage. I mean, you have lots of options, but generally speaking, and I know I'm a loan officer, I'm not super in favor of paying off a mortgage. All right. I love how I can just talk to myself for ever. God, I just realized I had that moment right now. I'm like, I talk to myself for 1 whole hour every week. Okay. So Van Slama says, "You're wonderful." Oh, I'm so glad. Thank you so much for saying that. I'm glad you found value today. How are you walking into equity with a new build? Well, you walk into equity because you set the price on your home almost a year in advance. And like I said, appreciation is at 1%. literally month over month. And so by the time you actually close on your house, there'll have been more sales at higher prices that will increase the value of your own home. All right. So let's see. Are there better options rather than paying a point and waiting for a break even? Should we pay PMI instead of breaking a point or add that to principal? I would always recommend looking at what your down payment options are, buying out mortgage insurance, and then definitely like loan programs. So sometimes, guys, just so you know, because there's a lot of like, people don't like FHA loans right now. But if your credit score is below a 680, oftentimes I see that it's way more expensive for you to do a conventional loan versus an FHA loan. So like looking into your options with that will also impact your monthly payment. So loan type, mortgage insurance, down payment, and then points is what I would have your loan officer compare for you. Okay. So yes. So a CFD, guys, on new builds. So generally in areas that have like that aren't as established, there are these funds that you have to pay into because they're trying to establish like local utilities and maintenance for that specific area. So we had them in like Sun City has one, Buckeye has one, like newer areas in town have them. There's some for water, there's some for, just general road maintenance. And so you just have to pay attention to those. They're typically a one-time payment whenever you purchase the home, and it's passed on to each subsequent buyer of the home as they enter in. And so your real estate agent can give you a lot more information on that for the houses that you're looking in or the areas that you're looking in. But I hope that helps. Let's see here. Do I worry about the Arizona market crashing? No, I don't. I'm not really worried about real estate crashing anytime in the next like 3 years. When I'm asked this question a lot, and I do worry about when my daughter buys a house. She's 9 right now. But I think by the time that she's buying a house, I think that we will have so much supply of housing. And I worry about what that looks like for her as a stable investment. I've thought about that a lot. But I think in the foreseeable future, I just don't see anything changing with supply chain anytime soon. Now we have potential like oil issues, which are going to make things even more expensive. I don't know what would change, right? Like, I mean, there's always the catastrophic, right? Like if I put my tinfoil hat on now, there could be, the coronavirus that, you know, like variant that kills all the boomers. That was horrible, but they do own 1 in 3 homes. That could be something, but like what would have to happen? And knock on wood, it doesn't, So, no, I'm not worried. That was a long answer to that. I have a 30-year fixed mortgage and was given the option to pay biweekly. Will this make a big difference on paying my loan off sooner? Yeah, it's essentially applying one interest payment or one principal payment to your mortgage a year. Depending on when you start, it can knock off anywhere between 5 and 7 years of a term. And if you think about what that costs in savings, it's significant. So I would definitely do it, if it doesn't make too big of an impact. And again, like I said, this is your forever home. Let's see. Okay, so Jesus says he answers that question. Okay. Do you think that home prices will stabilize in the near future or just continue to go up? So here's what I think will stabilize. I think that we'll get to a point where people, well, I said that last year and I was right? I said that appreciation would go down, but I didn't think that home values would go down. And I think we've kind of gotten to that point. I think, 1% appreciation is going to be consistent. I think we've lost a lot of buyer demand and we'll lose more buyer demand as affordability goes up. But I just don't think the conditions are right for people to pay under asking price and then for, home values to go back down to 3 and 5%. I know we'll hit that somewhere. I just don't know what changes? So I'll let you know as we go on. I'm sorry, that's a lame answer to that question. Oh, thank you, Harshal. That means a lot to me. Thank you so much. Anything you wish more buyers knew about the loan process recently? Oil issues, lumber issues, garage door issues, bath and medicine cabinet. What issues do you want? You know, so I see a lot of issues all the time. I think that my best recommendation for clients, truthfully, is to be flexible with their expectations. So, it's budget 0.5% higher than what you think your interest rate's going to be if you're just starting the home buying process. It's, be super organized with your finances. Be willing to understand that the price that you're paying today might be over what the house is valued because you're doing a 6-month look back on value versus looking at market price. I think that's the biggest thing that people have the hardest grasp on, or the hardest way to wrap their head around. It's like, why would I overpay for something? And the thing is, you're not necessarily overpaying, but it's like, okay, I'm going to give you a different analogy. So it's like, let's say that you had the opportunity to invest in Facebook when it was just an idea. Okay. You would be overpaying for Facebook back then, right? Because of its potential appreciation. And yes, there is risk with that. There's risk with all kinds of investments, but look at how well you would have been paid off. Okay. Like real estate right now, when you know that it's appreciating in double digits, you're just buying into that investment appreciation. And so, it's not like the home value stays stagnant. Okay. It rises again, like I said, with the cost of inflation. So even though inflation is a concern, lots of things are impacted by that. And so I think that's the best advice I would give home buyers right now is understand what your break even is, understand what that rate of return will look like a year from now. And most of the time that can pretty much get them off the fence. All right. What are my concerns about the future generations, that they won't be able to afford housing? No. I actually think the future generations are going to face too much housing inventory. And this, guys, you can Google it. I'm not sure how you would just population concerns for 30 years from now. So some of the smartest people have been really talking about this, like Elon Musk, right? Jeff Bezos. And it's about the fact that millennials waited so long to have children, right? The average age of moms now is 36, 37, and they're having fewer children than past generations. And so when you look at how that impacts housing, it impacts housing 30 years from now. So right now we're seeing an influx of new home buyers. Millennials are a huge generation. Gen Z is actually 10% larger than millennials. And that is a result of, 30 years ago when Gen X and boomers were having babies. 30 years from now, because we aren't populating the earth the way that we need to, we will now have way too much inventory for houses. And I think that housing values 30 years from now, I think they have a potential for a crash. Now, it is too hard for me to predict this now. Okay. But honestly, if it does happen, I will be so famous if this channel still exists. Yeah, it's just this is the kind of stuff that you have to anticipate for, but that's what makes me nervous about future generations. But is that a reason not to buy houses now? No, 30 years from now, guys, I'm gonna be super old and I won't be worried about this issue because I won't be in mortgages anymore. And hopefully by that time, my house is paid off and I'll have to live somewhere. All right. God, I'm getting on such weird tangents tonight. Really appreciate all the information. Love. Oh, thanks, honey. Thank you so much, Pranishi. Julia says, if interest rates go down after I purchase a home, how soon do I have to wait to refinance? And what costs come with refinancing? So, generally speaking, for rate and term refinance, you can actually refinance right out the gate. If you're looking to take any cash out, you have to wait 6 months. But just realize that if you're going to refinance your home, straight out the gate, there is a penalty for the person that just helped you get your loan. So generally they'll ask you to wait at least till you've made 6 payments. Okay, so I hope that helps. guys, just so you know, it's unlikely that interest rates will drop enough for it to make sense for you to refinance right out the gate. I honestly only see people do that whenever they get hard money financing, or they're in a new build and, they found out that they walked into 20% equity or something. Okay. Alrighty, guys. I just saw that it was 7:03, so this passed by super fast. And we have one question more in the chat, and then I'm going to go watch Love is Blind with my husband. That's our nightly ritual. So I appreciate you guys coming. So is it mandatory for a buyer to go to the builder's title company if he's choosing to go with an outside lender for the mortgage? Honestly, I'm pretty sure that it's contractually written that you use their title company, and you agree upon that when you enter into that contract. Now, you can always get your documentation reviewed by a lawyer, or by outside, escrow party. And I do believe that you can get your own personal title insurance done through somewhere else, but the general escrow is typically dictated by that purchase contract. So, all right, guys, thank you so much for tuning in. We do these every single week, Wednesdays at 6 p.m. So I appreciate you guys tuning in, and I'll see you next week.